Well, there was other market-moving news today, and Microsoft led the way. We told you earlier this week that job cuts were coming at the company, and today we found out how deep those cuts would be, and they are deep. Microsoft will lay off 18,000 workers over the next year. It's part of the company's plan to streamline its operations and become the dominant player in the cloud. Shares up 1% on this down day. Josh Lipton has more on Microsoft's move.
Investors knew job cuts were coming at Microsoft, but the big surprise is how many employees the software giant is really letting go. Microsoft is cutting up to 18,000 jobs. That's 14% of its workforce and about double what Wall Street expected. Most of the cuts are coming in the Nokia division. Microsoft bought Nokia's phone business for $7 billion nearly a year ago, and it's now cutting about half of its employees.
It's a pretty bold move. And I think what it does is it signals that Microsoft is not going to get kind of on the slippery slope with Nokia. They're actually going to trim the Nokia cost structure very substantially. And that was something that was worrying investors, that this acquisition could really dilute earnings going forward. It'll still have an impact, but this will help mitigate that, I think.
In a memo to employees, CEO Satya Nadella wrote, "The first step to building the right organization for our ambitions is to realign our workforce. The company will start with 13,000 cuts right away. The cuts are expected to be completed by next June. Microsoft says the restructuring will result in a pre-tax charge of up to $1.6 billion. Microsoft stock moved higher on the news, hitting a 14-year high this morning. The stock is now up nearly 20% this year. Since taking the helm from Steve Ballmer in February, Nadella has steered the company away from its PC-centric focus and instead emphasized mobile technology and the cloud, or web-based software sold as subscriptions rather than licenses.
Yeah, in terms of the cost savings, he really needs to put a lot of strategic endeavors on mobile and cloud. I could see more M&A specifically in those areas, as well as big data. And at this point, Nadella is really the general, taking the troops to where they need to go and making sure that Microsoft can compete with the Apples, the Amazons, the Googles on the horizon. This puts them in a much better position to do that over the coming years.
Today's job cuts are just the latest example of Nadella's bold moves to make Microsoft his own. So far, investors and analysts have cheered his decisions. We'll get a lot more information about how Microsoft is performing and more details from Nadella about these job cuts when the company reports earnings next Tuesday. Josh Lipton, Nightly Business Report, Silicon Valley.
For more now on whether the massive layoffs will help reshape the future of Microsoft, we're joined by David Garrity of GVA Research. David, welcome back. Good to have you with us. Is Satya Nadella on the right track?
I think Satya's got a proper focus here in terms of the company. Bear in mind that Nadella came to the CEO role after having basically gotten Microsoft's cloud operations up and running. And to the extent that he'd had the great success there, it certainly positions him well from a vision standpoint to lead the company going forward. Taking these costs out and investing in areas of higher growth certainly should get the company up to where earnings right now are going to be down 10% year over year, but revenues are growing 16%. If we can get the earnings growth in line with the revenue growth, the stock probably moves higher from where it is now.
So talk to us a little bit about what is Microsoft going to look like, let's say, 5 years from now. A lot of talk about mobile, about the cloud, about restructuring. What's Microsoft going to be? What are we going to say about it?
I think the cloud operation probably will represent something between a third to 50% of the company's revenues in terms of the type of services that they offer. With respect to kind of the core products that we know Microsoft for now, the Office Productivity Suite and their Windows operating system, they face major competition from the likes of Google with Android and also from Apple with the iOS operating system there. So that's going to be a far more competitive business. One question is that the Xbox, where the company, certainly has been moving into our living room. Does that get spun off to shareholders? Possibility. I think Microsoft is, though, going to have to stay with their search advertising business, which they might actually take over entirely from Yahoo, who seems to be fumbling. So I think from that standpoint, the major pieces you're going to see, obviously, rise in terms of cloud, certainly mobile services offerings, and delivery via the internet over mobile devices.
What would you like to see them do with respect to the Xbox? You anticipated my question. And second, the stock is already up 20% this year, a 14-year high. You say it can go higher. How much?
Well, we're going to have to see, clearly how well the execution goes in the second half of the year, but I would say it's probably not out of the question that if we have a positive market environment overall without today's volatility, you might see a $50 share price between now and the end of the year.
David, thank you very much. We appreciate your being with us.
Thank you.
David Garrity of GVA Research.